on where you're logging in from. So we are ready to kick things off here, and for those just logging in, you should now hear me. You should see the screen, and as long as you've got those two things, you're good to go. And for those of you who are wondering where you can, type in questions and interact, there's a questions box there in the dashboard. So if you have any questions, you can ask them directly in there. Sammy and Amber are here with me this evening, so they can help answer any questions. And then, we'll save a Q&A here towards the end, so this way I can get through the material. And then, like I said, we'll leave some time for that Q&A a little later this evening. But in the meantime, Sammy and Amber, as I said, are here, and they can help answer those questions that you may have as well. So with that, we'll get started here with talking about Forex, the world's hottest market. And if you don't believe that, you will soon believe that, based on all of the events that have started to unfold, and we'll talk a bit about here as we go forward here in the presentation. So what I am going to first do is just quickly get the disclaimer out of the way. And as I'm sure you guys know, trading involves risk. It doesn't matter what you're trading. Forex is no different. All I can really say is that, look, any business endeavor that you're going to get into has a certain level of risk involved, and the bigger risk comes if you're not educated, if you don't know what you're doing. So just know that as we go through this, and make sure that you get yourself educated. So with that, clear your calendar for the next hour. There you go, Stan. Just answering your question here now. So for about the next hour, I mean, depending on questions, I'll stick around longer than that. But as far as the content and the discussion here, be about an hour. So make sure that you've got at least that time allocated for this. And in that hour of time, we're going to talk about the 5 truths of Forex that you may have never heard about, why you should trade Forex, and I'm going to show you some real world examples that I have called through the newsletter service that we have here at T3. I'll show you those alerts, time-stamped as they went out, and we'll look at those trades, okay? So, a little bit about myself. Kurt Capra, that is who is speaking to you now. This allows you to put a face to the voice. I think it's always nice to kind of know who's talking to you rather than just a voice. It's always nice to see the face on the other side of it. So there you go. And here's just a little bit about myself. I graduated from Pace University and knew what the markets had to offer, and still have to offer for that matter. So with that knowledge, I just dove right in, and upon graduating college, I started getting myself more involved with the markets and trading, etc. Since then, I have become a member of the research department here at T3, educate, teach a number of our courses, as well as head up the Forex program here, along with the newsletter that we have. So that's a little bit about me. Now, as I said, I'm going to tell you the truth about Forex, and I think a lot of times what you hear out there is smoke and mirrors. I mean, I'll tell you straight up, this is not a get-rich-quick type of market. I'm sure that a lot of other marketers out there, I'm reluctant to even call them educators, but marketers out there will want you believing otherwise. They'll say that it is a get-rich-quick program, or that they have this magic software, this or that. And you know what? I'm not saying that the software they have doesn't work at times, but what I'm going to show you, what I teach people, is something that will last a lifetime. It's not, like I said, a software that's working right now based on the current volatility or the current elements of what's happening. It's based on fear and greed. So no matter what's going on in the environment, no matter what the level of volatility, you will be prepared no matter what's going on. All right. And that's true just in the context of what's gone on recently. You know, I'll show you trades that I called before the presidential election and exited right before the actual election happened. And I'll show you trades that I've taken since then and how the volatility has shifted back and forth. And you'll see how the bias, how the approach hasn't changed. So let's get into those truths. It can be less risky than stocks and options. All right, it can be less risky than stocks and options, which, if we're talking about truths, is probably something you've not heard. You've probably heard that Forex is more risky, and that is completely untrue. Right? Profitable strategies are often quite simple, and that's what I'm offering to you. And quite frankly, if you decide to move forward with the newsletter, you don't even have to worry about the strategy in a sense. I mean, you can leave that to me and let me do the legwork. You just sit back, wait for the alert, and take the trade. You know, I mean, so if that's what you're looking for, then we can certainly satisfy that need or desire. But if you're looking for that and also the ability to make these decisions for yourself, then I can share that with you as well. And yes, this is being recorded. You can also apply what you've learned trading other markets. So if you have found success trading other markets, you can use those same strategies in many ways to be profitable in Forex, especially if you approach things in the way that I do, which is completely based on technical analysis, really focusing on the charts. As you'll see, I'll show you exactly how I lay my charts out, and it's very simple. You don't have a lot of tools or indicators. I mean, that just creates more confusion in my opinion. So if you look at things in the way that I do, you can use this information to be successful trading any market, whether it be Forex, equities, ETFs, futures, etc. And it has huge advantages over other asset classes. Leverage is one huge advantage, as well as time, which we'll talk about. Time is valuable to all of us, right? And Forex allows you more time, not just to trade, but to do or pursue other passions that you may have. Right? And like I said, I'm not going to get into all of it here right now because we're going to, take some more time to really dive into it here in just a few moments. But just know that it has huge advantages over other asset classes. And you can invest long term and stay safe. Where a lot of people may feel that it's only for short-term trading, right? And it's not to say that you can't trade short-term in Forex, but that's not the only thing you can do. Right? It really, as you'll see, is just as dynamic, if not arguably more, than anything else. All right. So why should you trade Forex? Right now that we've gotten these truths out of the way, why should you trade Forex? And guys, keep in mind, I'm not saying that you should do this exclusively over anything else. Right? You may choose to do this exclusively, and if you should choose to do that, that's perfectly fine. Or you may choose to use this as an additional tool or vehicle that you have to make money. Diversification, right? Instead of putting all your eggs in one basket, trading one asset class, you can look to expand into Forex. And like I said a moment ago, you don't have to relearn everything, especially with this approach. You can take the same approach trading Forex as you do trading equities. And this is something that I do every day. So it's not something that I'm just kind of throwing out there as something that isn't real, okay? Forex is the most liquid market in the world. And here you can see the a graph to represent that. Forex market does $5 trillion in daily transactions on average. As you can see, that dwarfs anything else. US stock market, futures market, they don't even come close. So in terms of liquidity, there's nothing that compares. It is second to none. Meaning for you, you can get in or out really at any time, assuming you're trading the more liquid pairs. There are some that you just kind of stay away from, that don't have the liquidity to them, but there's more than enough that do. And as I said, you can get into and out of those really any time, day or night, with complete confidence you'll get filled where you want. And it's a 24-hour market. This goes back to what I was just saying in terms of time and our time being valuable. So here's a breakdown of the different exchanges and the times that they're open. And as you can see, we really have this endless stream of activity. When you have the London market getting going, Tokyo is closing, and then as London starts to, kick into high gear, you've got high gear to maybe moving into the later part of the day, you've got New York overlapping, which is when you can get some of those higher levels of volatility, where volatility may peak at times when you have the London and New York sessions overlapping, and then as New York is coming to an end, you're starting to see a pickup in Sydney, right? Australian dollar, New Zealand dollar, and then of course back to the yen getting going and some of those other pairs. So as I said, you have this continuous stream of volatility, which does, change with the time, but there's this endless amount of opportunity. And guys, when I say opportunity, I don't necessarily mean taking a trade right now, right? Opportunity may come in the sense of what is going to be happening, right? It's not just about can I place a trade right now, but rather what do I see coming down the pipe? Can I prepare myself now for something that's going to be happening? And what you'll find is that during the Sydney and Tokyo sessions, while volatility may be at its lower points, it's not to say that there's no opportunity. In fact, you'll find a lot of opportunity, a lot of patterns materializing during this period of time and then triggering with the London and New York sessions. So as I said, not only do you have this continuous stream of information, but also, look, if you're working another job, if you're having some other business that you're running, or maybe you're trading other markets, whatever the case may be, you can still trade Forex from longer time frames because, guys, let's get a little interaction here. What do you not have to worry about if you have a 24-hour market? If you're trading a 24-hour market, what do you not have to worry about from one day to the next? Yeah, gaps, the open and the close. I mean, you do have the open of one day and the close of another, so you do still have that. But yeah, I mean, you're on the right track there, and I'm pretty sure that you mean the gap. And so yeah, exactly. You don't have to worry about a gap. Therefore, again, you can go to bed at night resting easy, knowing that, hey, if this trade isn't doing what I want, my stop loss is in place. I don't have to worry about it gapping above or below my entry point, which is a very real concern or consideration you have to have. And no, there's no uptick rule either, so you can short at will. If something is getting hammered to the downside, there's nothing that says you can't just short it at the market and continue to ride it lower. So absolutely not. There is no uptick rule. You see, there's very little regulation in terms of Forex because it's a world market. Who's going to be the oversight committee in that sense? So you have very little rules imposed upon you, and some might say, well, that's kind of a scary thought, but if you're following the trend, if you're reading the chart and you're confident in what you're doing and you know what to be looking for, there's really nothing to be fearful of because you're just going to ride the coattails of the professionals. And I'll show you how we've done that in just a few minutes when we look at some of these trades. But before we go there, know this. It is also more cost effective to trade Forex than stocks, options, or futures. And again, like I said, I'm not saying you have to do this exclusively, but there are additional advantages, and cost is certainly one of them. There's no commission, as it's usually built into the spread. And T3 is set up now where we can take on Forex accounts and receive very tight spreads, institutional type pricing, which can really, as I said, get you some of those tighter spreads more so than what you'll see at other places like an FXCM, for example. So it can be very, very cheap to get involved with Forex trades. And you don't have to worry about trading platform fees or data fees, which can all, as we know, add up in time. There's also no exchange fees. So if you think about it, you can take all of these costs that you may currently be incurring and put them in your pocket when it comes to trading Forex, because you don't have to worry about them. There is no overhead in these areas. And as I said earlier, we are kind of on the horizon of a new world of Forex opportunities, and you have to be getting ready for that now. Not to say that things haven't been great previously. Right? It's kind of one of the untapped areas of trading that most people shy away from for one reason or another. But with everything that's going on around the world, right, there's going to be an endless number of opportunities here in trading currencies. So first you had the Brexit, right? Now Donald Trump. And if you weren't watching Forex or currencies at that time, I'm sure you saw different stories about what was going on. Even, US dollar, Mexican peso, and how traders and stories, news outlets were highlighting this relationship. And I actually wrote a piece for our subscribers of the Forex newsletter about how putting all the news aside, kind of just looking at things from a clear perspective. There is nothing that happened in the US dollar, Mexican peso that wasn't being suggested by the charts. Furthermore, there wasn't anything that happened in pound US dollar that wasn't being suggested by the charts. Now, maybe these events accelerated the movement, but none of it would have been a surprise if you had the ability to look at things objectively through this clear lens that that I'll provide. And coming soon, we've got a number of other events, world events, that are, as I said, right here on the horizon. You got the FOMC and the ECB rate decisions that will be coming right down the pipe here in December. Then you've got major government shakeups, which we've already started to see with, again, Brexit and Trump. But you've got shakeups in Italy, France, Germany, and possible trade war with China. So there's a lot of uncertainty. And with uncertainty comes opportunity, right? If you know how to position for it, if you know what to be looking at. So if you can remove yourself from all of the fear that most will try and press upon you, and look at things, as I said, clearly and objectively, you will be able to make money from these opportunities. And you don't need these things to make money, obviously, but they will help add more volatility. They will help add more uncertainty. And like I said, with these things comes opportunity for those that are prepared. So I'm going to show you some real world examples. Just give me 1 second here. All right, guys, so I'm going to give you some, like I said, real world examples here. And I'm going to have to take down the slides for a moment. So just give me a second to do that. Can you see the charts? I've got one large chart expanded here, but can you see the chart? Yes? Okay, perfect. Excellent. So this is Aussie dollar, US dollar, and this is how I look at things. For those of you who are wondering, this white dotted line that you see is the daily open. All right, so this is each day's open just being denoted. And then I've got a couple moving averages on here. You can see this is down here. This is just an average true range, which I don't use in terms of really making decisions to enter positions. I just use it to kind of get a feel for the day-to-day volatility. All right, it's, like I said, not something I use to make any decision to go long or short. So let me really quickly here pull something up that I want to show you. And this is the actual alert that went out to our subscribers. So you guys can see this? Just want to make sure that you can see the alert here. All right, perfect. So on November 3rd, and this is right around noon, so 12:33, you can see its timestamp, date, etc. And I say, I'm going to buy the breakout on Aussie dollar, US dollar. We've got our entry, we've got our stop, and the target, which in this case was to be determined because the chart was set up in a way that really could give it some very nice follow through. So instead of picking a number that may or may not follow through, may or may not work, I know I've got a good setup with a defined entry and stop, and I know that it's got room to follow through. So I'm not going to worry about determining a target right now. I know the setup is good. I know it has room to follow through in my favor. That's all I really need. All right, so again, you've got your entry stop target. We're buying Aussie dollar, US dollar, November 3rd. Here is where it actually triggered. So again, 76.86 was the entry. We bought it right here on this breakout. So right here on this breakout, you can see where this tail actually pops up over those recent highs. Pops up over these recent highs, and then it starts to come back in. But we had a stop that was far enough away that kept us protected. I actually gave it, more than enough room, to be honest. Remember, it was 76.58, so the stop was down in that area. So gave it enough room to where we sat through this wiggle, and then it started to follow through nicely. And I took some of the position off as it began to move up, and then on Tuesday, November 8th at 4:37. Okay, so basically election day when we had all that volatility. Okay, I'm closing the rest of Aussie US dollar here around 77.63. So, around this area, because by the time it gets out, it might not be exactly there, but 77.63 is where I was looking to take it. And if we look, it's when it started pulling in here. Right, so after it started to push up and then pull back in, I took it right up in this area here, 77.63. Right, actually right here. This is where the trade was exited. And did I know this was going to be more or less the high of the move? Absolutely not. But I knew that it had just had a very accelerated move up, very nice push to the upside. It was also, again, 4:37 in the afternoon on election day. I wasn't looking to hold on to anything into the election. So that was another reason as to why I took it off. I mean, if not for that, I very well may have held on to some of this for additional follow through. But furthermore, if we look at the daily chart here, it was running up and had just cleared the top of this range. So it was up a couple days, and I can squeeze this open here. This was the move up, okay, right here. So it had just cleared the top of this range after 2 days up with an accelerated move and ahead of the election. All of these things just began to compound and add to the uncertainty. And after a nice run up like that, I'm gonna book the profits. All right. So that's what we did there on Aussie dollar, US dollar. Do these alerts go out around the clock? They don't go out around the clock so necessarily. I mean, if I'm looking at the charts, I will send out an alert. So sometimes they'll go out at 8 o'clock in the evening, or maybe 6:30 in the morning if, like I said, if I'm around and looking at things. But my approach is based off of the hourly chart. So I don't have to babysit my trades. And that's one of the nice things that I really enjoy about Forex, is that I don't have to be there constantly looking at, is it doing what I want it to do, and how quickly are things changing. The hourly chart gives me that flexibility in time and schedule to really let it go to work for me. And that's what you should look for out of any trade, is to really let it go to work for you. Well, I look for patterns. So are the setups usually clean patterns or whippy tails? It's usually clean patterns that I'm looking for. I mean, are you always going to have that in every pair? No, but I've got 24 different pairs that I'm looking at on a daily basis. So if I can't find good quality patterns on at least some of those, then there's something very wrong with that, whether it be the environment or some other external factor. If I look across that landscape of the 24 patterns and it's all tails and indecision, then that's basically the market telling me take the day off. And instead of sitting there trying to make something out of nothing and get in trouble, as I'm sure we all know how that plays out, I'm just going to walk away. I don't have to be doing something every day in order to be successful. And I think that's something a lot of traders fail to realize or understand, is that it doesn't have to be something where you're super active and trading all the time. Right? I might only do 3-4 trades in a week, and I'm okay with that, because if those 3 to 4 trades, not every single one of them may necessarily make me money, but if the majority of those are going to make me money, if I can pull 80 plus pips out of the ones that make me money, then that's going to be a good week. Right? In fact, I mean, look, this newsletter really just started in September, and it's already up with including the positions that I have open, which is really at this point is just one. Including that, we're up just over 1,000 pips for since inception. So, like I said, we started in September, 2 months time, and it's more or less. I mean, if you kind of average it out, you could say 500 pips a month, which is, you know, pretty good, pretty good. Um, how many alerts do you send out? It really depends. I mean, you're always going to get a morning update as to what's going on with the main US dollar pairs and what my thoughts are, whether I'm bullish or bearish on it. So you'll always get that. You'll get a weekly video at the end of every week. I put a video together that kind of gives a recap of everything that's gone on that week and what we can look forward to in the following week, as well as the various alerts about entries and management and just other general thoughts as to what's going on and what I have on the radar, what I'll be watching for the next, couple hours, depending on how it behaves. So, on average, I mean, you're going to get probably 3 to 4 email alerts a day on average. Now, again, don't mistake that to think 3 to 4 trades, because they're not always going to be trades, but it may just be letting you know what I'm going to be looking for, and you know how to get yourself prepared. A pip is simply the smallest incremental move that any Forex pair can make. So it's like points when you're trading stocks. So that's just, instead of looking to capture points or cents, we're looking to capture pips as Forex traders. And we talk about all of this in the course that I teach as well. Right. So, guys, I'm going to hand the mic over to Amber for just a couple minutes. She's going to talk to you about, the program, the newsletter in a little more detail, and then I'm going to come back on. I want to show you some other trades that I've done, including this one here on the Canadian dollar yen, which you can see I still have a position on. So, and you can see the entry was here. We're still in it. Really, really beautiful move up. I'll show you the alert that went out for that trade as well. So we'll talk about that when I come back on, but I'm going to hand the mic on over to Amber here for just a little bit, and then I will talk to you guys here shortly.
Guys, can you guys hear me now? Guess I was speaking to myself there for a minute. Thanks. That's a little embarrassing. But I hope you can see my slide here. We're doing something a little extra than we usually do at a webinar. For this promotion, the Forex program, and specifically Kurt running it for T3 Live the last few months, it's really been picking up a lot of steam. Hi, Tom. Good to see you. So we wanted to, as the last course of the year, and as getting into, these huge changes that Kurt had been talking about, the new leadership around the world, the new, business deals and opportunities that this new leadership can bring. We expect a lot of movement in the Forex markets in the coming year, especially on these higher time frames that he trades, the 1 hour, the 4 hour, even down to the 15 is a sweet spot for him. So we wanted to make this an accessible service for everyone as it starts growing. So we wanted to give you two different options. Actually, I'll give you a third one as well to join in on the program. So if you just want to follow his letter, he does send out a morning it's called a morning email where he does discuss the different U.S. pairs, then alerts throughout the day. He also closes out the evening. If you just wanted to follow his alert service, you can get that for 38% off tonight only. So the normal subscription is $7.95 for the year. You can get it for $492.90 to be exact. Or option two, if you wanted to, just take the lab where you can learn his strategies, where you can learn how he looks at the Forex markets. He does give a brief introduction in the beginning. If you're newer to Forex trading, if you're a stock trader looking to transition or add it into your arsenal, we can Sammy and I also have some different resources to get you caught up on some of the terminology. For instance, what is a PIP that we were asked earlier, to get you prepared for the December 5th through 9th course. So you don't have to know about Forex. We will get you fully prepared, but learn his strategies, take his lab. That is 50% off. So that would be $497.50. If you wanted a combination of the two, so you wanted the lab and then you wanted to reinforce it in with the newsletter, you could get the two of them for $8.95, which is an additional $100 off than doing them individually. Again, this is something that we have been watching a huge increase in interest. A lot of traders that have lost faith in the stock market or haven't been as consistent or don't have the capital or want to start off in a little slower pace, or even, like I said, add Forex into their trading arsenal for a 24-hour market. It's been picking up a lot of steam, and we'd love to have you on board and learn from Kurt as this program grows. He's actually, since I've known him, if you don't know, he's my husband, but since I've known him these many years, he has been in the equities markets, he has traded futures, and now he's found a sweet spot in Forex. So we would love to have you on board. You can email tonight only for these options. info@t3live.com. You can put option 1, 2, or 3 in the subject line. As long as you email us tonight, we'll save this for you. We can contact you tomorrow. We know it's later in the evening. If you'd like to get payment in tomorrow, that's fine. Just make sure that you email in tonight and reserve that spot. Again, info@t3live.com. Let me answer a couple questions. Are there any trial options? Yes, email in to info@t3live.com. I can say, though, after the trial, you will not get this price. If you were to do option 1, there is a 30-day money-back guarantee. So if in 30 days you decide it's not for you, you can get a full refund. That's no problem at all. But still, hold this price in case you wanted to continue. How much is that in Canadian? Yeah, the Canadian, man, that exchange rate, that'll get you. But we've discounted it so much. Normally the lab itself is $9.95. The year to the room is $7.95. So it's a very, very reasonable price. Again, email in at info@t3live.com. Option 1, 2, or 3 in the subject. Sammy, Saeed, and myself will be here all night. Making sure that everyone is accounted for, that your seat is taken. And again, if you want to take this lab but you're not familiar with Forex, we can get you up to speed on some basic terminology before the December 5th class, so you're fully prepared, and then it's all strategy from there. All right, so with that, we'll be checking out the email. Kurt, I will take it back to you. Quick question. Yeah, Michael, there's no futures or Forex trading with T3 in the prop account. So you might have heard my prop presentation the other day. There's no prop trading, but they do have an institutional retail capabilities for Forex. So you can get 50-to-1 leverage, and they have the institutional spreads. So it's the professional spreads. There's no platform fees. There's no data fees. It's really super cheap to trade it. That's why, even I had been thinking for a while of just adding it on. It takes minimal capital. You get high leverage and very low cost. So you can open an institutional retail account for Forex at T3 Trading Group. Does option one include basic terminology? Stan, if you went ahead and you chose option one, I can send you some resources. Sure thing. Email into info and we'll get you set up. Gary, how much is the second year? Excellent question. You are grandfathered into this price, so we're not going to raise the price on you year two. If you come in at this price, this is what you will renew at. So, and this will save you money year after year. The lab is December 5th through the 9th. It'll be held from 9 a.m. Eastern to 12 p.m. Eastern. You also get a full course manual with all the strategies, all the slides, everything that he will go over in the course will be yours to keep, plus the recording of those full 5 days. So you can continue to refresh, you can ask her questions, look at all the slides and strategies even after that week. And in fact, we're feeling friendly. If you did option two, we'll even include 1 free month of the Forex Profit Accelerator newsletter, just at least to get you acquainted with that first month after taking the lab. How's that sound? Awesome. Yeah. Email in option two, or again, option three would save you an extra $100. If you did it both, you get 1 year of the room, or I'm sorry, of the newsletter and the lab, plus recording manual, all that included. All right, great questions, guys. I don't want to keep you. I know it's getting late. Kurt's got some more trades to show you, but keep asking your questions. We'll be answering them for you there. And Kurt, if you are ready.
All right, guys, I'm back. Can you hear me? Perfect. All right, and just second question here. Can you confirm that you got that screen up again? You can see those charts. Perfect. Excellent. Okay, so the next thing I wanted to show you here was another alert, and this one was actually a dual alert where we were looking to sell short, and look, by the way, this is yesterday. So this was on November 14th at just before 2 o'clock. Okay, and by the way, before I go into this, I saw somebody say, do you have to be watching the email? How much time do you have for these trades? It really depends. I mean, I look to try and give you as much of a heads up as I can, so that's why I'll send out an alert to say, hey, I'm going to be watching this for a pullback, or I'm going to be watching this for a consolidation to play a breakout, what have you. And this way you can at least know kind of my thinking before it actually sets up, so that this way when it is setting up, you can be already kind of getting prepared to take it, and then you'll see the alert come through saying, okay, here's the entry, here's the stop, here's the target. And so like I said, I do try and give you as much lead time as possible, but there are instances where things do happen more quickly, and so sometimes, being there near the email, or at least having it on your phone, will make it easier as well. Is every trade using the 1 hour chart? Primarily, yes. I will at times reference smaller time frames, or I'll say, you know what, you can look to the 15-minute for some type of pullback on an intraday basis, but I wouldn't hold it for an overnight type of play. But yeah, for the most part, everything is going to be with the intention of holding it for at least the entire day, and if not, likely for a multiple day period of time. So that's kind of where I not find more success, but that's where I just kind of enjoy being, where I can sit back, relax, let these things come into me, and then hit them and just, let them pay us, right? Let them pay us. So looking at this here, yeah, it's not so fast paced, exactly. I mean, and if you want that faster pace, and by the sounds of it, you don't. But for those that do, you can still use what I'm talking about and what I teach in the course to apply it to 5-minute charts if that's what you want to do. So it's not to say that this method doesn't work with those smaller time frames, but that really, that's more a matter of personal preference rather than it is anything else. So you got pound US dollar, which was a short, okay? And as I said, I mean, it's retraced after making a lower low earlier in the day, and it's formed what we call a sell setup on the hourly. So I'm going to be looking to short it. And you get your entry, your stop, your target, and this was done yesterday. This actually hit our target early this morning. And then I was also looking to play the Canadian dollar yen long. And I even said, you know what, I missed the ideal entry, which was above the prior bar, but we're still getting a nice bullish reversal. So I'm going to look to play it at this point, 79.85, give you your stop. And then the target was again to be determined here because the daily just looked that good, where I'll book some profits on the initial ride up, and then I'll look to capture a bigger move if that's what's available. You missed the options. Option one is the newsletter and alerts. Yeah, option one is the newsletter and the alerts, and then option two is just the course. So if you email into info@t3live.com, they can get you set up with some of those additional details. So let me pull up here the pound US dollar, and we'll just kind of go through that one first. And so here, right, here's pound US dollar. Let me just pull this back here. Okay, so pound US dollar, the entry was at 25.50. All right, so that's where the entry was. So if I pull out my crosshair, or I'm sorry, the stop was 25.50. The entry was 24.85. So the entry was pretty much right under this narrow bodied bar. So the entry was here. The stop was, significantly higher up here. And you'll notice that I have a tendency to give things maybe more room than necessary. What some might say more is more than what's needed, but it's my opinion that I'd rather give things a little more room to move against me if I really believe in the setup, because this whole idea of having a 2-to-1 reward to risk, it's good on paper, but how many times, guys, you tell me, no matter what you trade, whether it be Forex, equities, I don't care. You tell me, how many times have you been stopped out only to see the trade then go in your favor, and then you look back and realize, well, if I only gave it, a little extra room. I mean, I'm not talking about a tremendous amount more room, but if you only gave it a little more room, you would have still been in the trade, you would have made money. How many can relate to that? Yeah, I mean, it's the story of your life. I mean, we've all been there. And so I think what it stems from is this idea of having to have trades that offer you 2-to-1 reward to risk. And as I said, it's something that sounds good on paper, but doesn't necessarily translate when it comes to trading. So, as I said, I'll give things a little more room. Maybe my reward to risk is the same. It might be even a little a little more reward than risk, or vice versa. But where it really matters is in your batting average, right? If that's something you're going to do, your batting average needs to be strong, and that's the reality of it. And so, yeah, I mean, to a certain degree, the algos know where certain levels are, and that's where I look to put stops above resistance if I'm going short or below support if I'm going long, and try and give it a little extra room there. So anyway, getting back to this trade, we took the short under this area here, right? And so it did try and run higher, took out this pivot high right there. Okay, I can actually draw on this. So right, there's the entry. Right. The stop was roughly up in this area here. And then the target was 24 or 1.2400. So again, not quite exact, but basically right down in there. And as you can see, in a few hours, we hit the target. Right, so that was a pretty painless trade. We had to sit through this initial little reaction up, but knowing where to put the stop, knowing kind of to give it a little extra room to sit through the wiggle, and that would have paid out. So, I mean, if you put your stop right up here, you get stopped out, and then what happens? You're reliving that nightmare where it stops you out only to go in the direction you thought. And that's what we want to avoid. So, again, all you do is follow the entry, the stop, and the target. You set it and you forget it. Basically, a lot of times I will go with an all or nothing approach, meaning that it's either going to hit my target or stop me out. Right? If I don't want to really have to do much work in between. There are times where I will take a little bit off as things are moving for me, but more often than not, I try and go with that all or nothing approach, because that's really what ultimately leads to success. An all or nothing approach when it comes to management is proven to be one of the most successful approaches. And if you just think of your own trading, how many times would you have hit your target if you just left it alone and not try to get cute and tighten up the trail stop or go to break even, whatever it may be. So that was pound US dollar. How much capital is typically required for Forex trading? It depends on the broker, but I mean, you could get started with a relatively small amount of money. I mean, $5,000 in an account you can get started with, and be off and running. And some places would even offer less than that, but I mean, realistically, I would say 5,000 at a minimum would be a good place to start. And the last trade I want to go through with you guys here, because like I said, I wanted to give you guys an hour, and I'm going to try and keep true to that. And just as a reminder, you can email info@t3live.com and just reference the webinar so you can lock in that price, and option 1 or 2, Sammy and or Amber will get back to you. But Canadian dollar, yen, okay? I'm looking to play Canadian dollar yen, which is JPY, long. As I already said, I missed the ideal entry above the prior bar. Here's the new entry, the stop, target to be determined. Okay, so there's all of the details. And again, guys, I want to highlight the fact that this is time stamped. I mean, this is not something that I can kind of tiptoe around and say, oh yeah, it's not like some of those other places where it's like, oh, this looks like it's going to move higher. And then if it moves higher, awesome, right? I called that. And I hope you guys got on board. And if it doesn't move higher, well, then you're never going to hear from me about it, because it didn't work. So these are time stamped, these are tracked, and I mean, I'll be perfectly honest. There was one trade that I had earlier this week, New Zealand dollar, US dollar, that, or actually it was Aussie dollar, US dollar, I believe. Either way, I took it short and it got stopped out. I mean, I'm not perfect, and I'm not trying to profess perfection. Anyone that is trying to tell you that they're perfect, that they don't have losing trades, quite frankly, is lying to you. Losses are part of trading, but if you know what you're looking for, if you can manage these things effectively and professionally, you'll be successful, right? So here's Canadian dollar, yen, and again, I just want to pull this back. So the entry, 24.85, and I want to spend an extra moment on this, because you can actually see here, I'm managing it with you. I'm going right here. Okay, so here's the entry. And when I said I missed the ideal entry, it was right here, right over this high. All right, that was the ideal entry, was over that bar's high. And as I said, I missed it. It happens. But how do you respond to that is what may set you apart from the rest. So I said, we're going to look to buy it at 24.85, which is, as you can see, denoted by this green line. That shows you where I got in, and then the stop was 79.84. So basically down here. And as you can see, I mean, we got initial follow through, but then the timing wasn't great in the sense of the time of day. The timing of the trade was great, but the time of day was more when things were going to start to slow down. So I mean that's okay though, because as I said, that could offer new opportunity, and this actually based quite nicely here before breaking out, and then boom, there it goes. And it's now just kind of riding this momentum, moving higher and really looking great. Okay, so I actually have adjusted the stop to under this little area here, and if we can get, let's see, what time is it here right now? 5:30. So we got about another half hour before this bar is done. What I will in all likelihood do is bring the stop up under this bar's low, because at this point I'm managing the momentum. I'm not really looking for the bigger move now, because this has been that bigger short-term move. The odds of it pulling back are increasing. So I don't necessarily want to sit through the pullback. I'll let that pullback occur, and then I'll just get back in, right? Because let me show you, as I said in the alert, the daily looked juicy, right? So let me show you the daily here. And here it is, daily chart breaking out of this consolidation after it had been going sideways like this for some time. So it's breaking out. It's got this prior high up here. So it's igniting what I would refer to as a breakout from a stage one, which is something that could result in a longer term move to the upside. And all of this stuff is taught in the course. I then offer it to the subscribers. Okay, and this is what I do. Right? This is what I do for you, whether you are a subscriber, whether you're taking the course. And by the way, those of you who do subscribe, you'll also get a monthly coaching session or meetup, if you will, where we all get together on the first Wednesday of every month and talk shop. We talk about recent trades. We talk about trends that are setting up or triggering. Okay? So that's another additional value that you're going to get, is not just these alerts, but also this monthly session where we get together, similar to what we're doing here right now, and learning and growing and getting better together. Right? So those are some of the more recent trades that I've done. I mean, guys, I can go back and show you other trades, but these are, I think, the ones that you're most interested in, because these are the ones that are happening right now. Anybody could go back and show you trades that they've done or what's happened in the past, but this is what's happening now within the last, week and a half. This is what I've been doing. So here, even starting this week, I called 3 trades. 2 of them have won, and 1 of them has stopped. And that one that got stopped was the New Zealand dollar, US dollar. I mean, I'll just show it to you here, because why not, right? Full transparency. And I knew that the odds were somewhat against this going into it, but look, if you're not willing to take the risk, then you're not going to make the money. So I shorted this breakdown, okay? That was my entry, was to short this breakdown, and since I knew it wasn't the greatest, I gave it a tighter stop, which was over here. And as you can see, it got stopped. It's still staying weak, but it just isn't doing exactly as it should. And the reason I said I knew it wasn't the greatest setup was because it's down multiple days and it just took out this level of support. So I knew the odds were increasing that it was going to bounce, but like I said, I mean, maybe it can get some additional momentum down to that prior low and keep going. If you're not willing to take the trades, then you're not going to make the money. And so that's one that got stopped out. But, you know, as I said, I knew going in that it wasn't necessarily the best setup. And I think there's a lot of value in that too, knowing that whether it works or not, just knowing and having the ability to prepare ahead of time for how this may behave is extremely empowering, in my opinion. So, guys, if you have any questions, I'd be happy to stick around and answer those for you. If you have any questions for Sammy or Amber, you can email them info@t3live.com. They can get back to you. Even if you're not ready to sign up right now, it might be late where you are, and we totally understand that. So if you can email info and just let them know you were here and interested, they can save the pricing for you, and then you guys can talk tomorrow or at your convenience. The dollar value of a pip on US dollar pairs is $10 if you're trading a standard lot. So if you're trading a standard lot and you have a 10 pip move, that's $100. And if you're trading a smaller lot size, or what's called a mini lot, that would be $1 per pip. If I was to recommend a Forex broker to you, I would certainly recommend T3. Like I said, they're set up in a way that can get you some of the tightest spreads in the industry, better than what you'll find at most retail places. So definitely, in my opinion, you should go with T3. So, again, guys, I also want to just mention that, as Amber said, this option one, which was for the year of the room, really, it's kind of like a free trade for a month in a sense, because it has a money back guarantee. If this service doesn't deliver for you within the first 30 days, then it's literally risk-free. It's literally risk-free, because if you're not happy with it, you get your money back. Right? So like I said, I mean, it's one of the easiest trades you'll probably make in your life, is just simply taking the step to give this a chance. As I said earlier, without taking the risk, you're not going to get the reward. So even if you just want to try it out, you have that 30-day grace period to decide. All right, so I see Amber's answering some of those questions about the trading costs with opening a T3 account. All right, you'll be calling in tomorrow. Excellent. Awesome, awesome. Do I expect the dollar strength to continue? Yeah, I mean, at this point, yes, I expect the dollar strength to continue until the trend tells me otherwise. So, and that's where I may differ from a lot of other people, is I go with what the trend and the charts tell me. So what they're telling me right now is, yes, to be looking for things to continue moving higher. You've got the euro US dollar headed lower, pound US dollar also weak overall. The US dollar yen is strong. So there's a lot of indications of strength in terms of the dollar. And to me, there's no sense in thinking otherwise and thinking that that won't continue. 4 a.m. for you? Oh, well, I definitely appreciate you being here. Thank you very much. All right, guys. Well, it looks like those are all the questions for me. I see some other questions for Amber and Sammy regarding the options that Amber spoke about. So again, guys, if anyone has any questions regarding those two options or even the third option of getting both, you can email them at info@t3live.com and they can help you out there, get you started on this new path, on this new journey. And it would be, it would honestly be an honor for me to start that with you and help you in this new path or new direction. So with that, I want to wish everybody a great night, and I'll talk to you soon.